After European stock markets had closed, it crashed through the $32.50 mark and soared a massive 6.8% on the day.
Wow.
It was an incredible move because silver doesn't normally move more than 1 or 2%, nor does gold. That's potentially coming for gold and silver. It could drive the prices a lot higher. Um,
Wow.
I think for the gold price, we probably should be closer to probably over $5,000 at the moment would be where
Wow.
I would put a fair value.
Gold prices are climbing on the global stage, driven by intensifying conflicts in West Asia and uncertainty surrounding the upcoming U.S. elections. Geopolitical tensions, along with a more cautious stance from the Federal Reserve, have increased demand for safe haven assets like gold and silver. Silver, in particular, has seen a surge of nearly 48% this year, outperforming all other industrial metals and energy commodities. Financial expert Clive Thompson remains bullish on both gold and silver, predicting an increased risk of a squeeze on short positions, including those held by gold miners who have borrowed gold. This squeeze could potentially push both gold and silver prices significantly higher. Thompson conservatively estimates that gold's fair value should already exceed $5,000. While he acknowledges that this target won't be reached overnight, he believes the long-term trend is upward, with buyers consistently stepping in whenever prices dip. Silver is finally coming to life after months of sideways trading and being overshadowed by gold's record run of new highs. But with the gray metal now trading above $34, one hidden source of demand could propel silver to a new all-time high in the not-too-distant future. Similarly, silver is expected to remain well supported as industrial demand continues to grow. Citi Research has revised its 6 to 12-month forecast for silver prices upward to $40 per ounce from $38, underscoring the metal's bullish outlook. Thompson shared his views on silver, explaining that for the past 2 years, he has been closely tracking its price and making small purchases, all the while wondering when it would finally take off. He considers silver to be a highly undervalued metal, which made its previous performance frustrating. It would rise, get you excited, and then drop again, he remarked, highlighting silver's volatile nature. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 20% of you are subscribed, and we're aiming for 1,000. Your support will make a big difference.
For a long time, at least the last 2 years, I've been looking at the silver price and buying a little bit of silver here and there and saying, when's it going to move? Because silver, I've taken the view, and I still take the view that it's an extremely undervalued metal. And it was very frustrating. It would go up, and then you get excited, and then it goes down, goes up, goes down. And finally, I think on Friday, we probably had the most exciting day. It broke out of its trading range. The resistance was at $32.50. And at some point, after European stock markets had closed, it crashed through the $32.50 mark and soared a massive 6.8% on the day.
Wow.
It was an incredible move because silver doesn't normally move more than 1 or 2%, nor does gold. If you have a 1% up day in silver, you get excited. So 6.8% on the day was very exciting, especially on a Friday. I like to call Fridays Smackdown Fridays because typically on a Friday, you see the shorts, the big boys. These are the big banks who are providing the other side of the market for the retail buyers. Typically on a Friday, they come in and push the price of precious metals down. It's not every Friday, but it seems to be just all too common. As we go into the close, the price will come off very rapidly.
Right.
Some people say it's the retail seller unwinding his positions ahead of the weekend. I think it's the big boys going short ahead of the weekend, so that the prices don't seem to be taking off because they make money when it doesn't take off, and
Right.
they try to destroy the market. But Friday was unusual because we had no Smackdown Friday. The price rocketed ahead. Gold barely did anything. It was, well, I say barely did. It was strong. It was up 1%, which wasn't too bad. But what this has done on Friday, it's triggered a lot of short covering. Certainly in the North American continent on Friday evening, there would have been quite a bit of short covering as it went higher. And then I think going into Monday, Tuesday, those institutions which have got short positions must be paring them back a little bit. They'll be thinking, we don't want to take too much risk, so they'll reduce the size of their short positions. I
Right.
don't think they're taking it off the table yet, but I think that's the direction. That's potentially coming for gold and silver. It could drive the prices a lot higher.
Wow.
I think for the gold price, we probably should be closer to probably over $5,000 at the moment would be where
Wow.
I would put a fair value.
And
And I
that's a
think that's,
conservative. That's conservative.
well, I know that's conservative with many people, but I think that's the direction of travel. Of course, we can't really get there overnight, but literally, if you see the gold price, literally every time it goes down a little bit, buyers from somewhere.
As reported by the Jerusalem Post, silver's uses in consumer electronics and renewable energy have been extensively covered, but its applications within the secretive realms of military and aerospace technology are less discussed. While central banks and large asset managers regularly report on silver inventories, purchases, and sales, the report noted that 5 U.S. government agencies, including the Department of Defense, Department of Energy, Department of Interior, and the U.S. Geological Survey, have collectively stopped reporting on silver inventories since 1995 and 1996. Thompson emphasized the strong demand for silver, particularly in the electronics sector, which he noted has been increasing by 20% annually. This growing consumption has led to a supply deficit, which widened in 2023 and is projected to become even larger in 2024. A significant portion of this demand comes from the photovoltaic sector, which saw a remarkable 40% increase in 2023, further intensifying the supply-demand imbalance. Now let's redirect our attention to a video.
Because silver is largely mined as a byproduct of other metals, such
Right.
as copper. So the fact that the price goes up doesn't, certainly not in the immediate term, produce any more silver coming out of the ground.
Hmm.
And the real fact is silver price has gone up a lot over the last decade, and the amount coming out of the ground is virtually, well, it's down. Well, for sure, there will be over time, and it takes a long time, some new sources of silver coming out of the ground. If we look at the existing silver miners, many of them have resources which were unviable when silver was $20 an ounce, but
Right.
that silver will be viable at $30 an ounce. So what they will do is start to borrow money from the banks to buy more machines
Right.
to start to dig it out. But that's going to take that's going to take multiple years. It's not something which happens overnight, and they don't make the decision instantly. They need to see the price sustained at the higher levels.
Right.
But little by little, more will come out. But having said that, the demand side of the equation is the most exciting bit. We have seen in the last few years the demand for silver rising strongly.
Hmm.
So if we go back a decade ago, there was much more silver coming out of the mines than was being used. By 2022, we had a crossover where the amount of consumption for industrial and electronic use and jewelry and silver plate exceeded what was coming out of the mines in
Right.
2022. The shortage or the deficit became larger in 2023 and is forecast to become much larger in 2024. Why is there a shortage? Well, it's due to the consumption from electronics. The electronics, which is the biggest usage of silver, is increasing by 20% a year, roughly.
Oh,
And a
really?
subcomponent,
20% a year.
20% a year. Yep, it is. And a subcomponent of that is photovoltaic, which I think in 2023 increased something like 40%. But that's a
Wow.
subcomponent of electronics. But the electronic use is rising by 20%, and that's pushing up the overall use of silver. So that increase in the use of silver in electronics is just not going to go down. We're not going to have less electronic devices next year than we had last year. It's
No.
only going to go in one direction. Now, they may find some substitute for silver, but there's nothing that I'm aware of which is on the horizon. So if you need a really good, really fast connection, microscopic connection, it might need a tiny microscopic bit of silver in your device.
Historically, silver's price movements tend to follow gold. The recent surge in silver signifies long-awaited confirmation of the broader precious metals bull market. Silver surged by 1.7% on Monday, reaching its highest level since 2012, before giving back those gains. Meanwhile, gold has set successive all-time highs in recent months, climbing over 30% this year. In addition to safe haven demand and political uncertainty in the U.S., the rally has been driven by strong central bank buying and expectations of U.S. interest rate cuts. Lower interest rates are generally viewed as bullish for gold, which doesn't offer interest payments. With both gold and silver rallying, what do you think are the key differences in their investment appeal during times of political and economic uncertainty. Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.